Good morning, viewers. It's Thursday morning, May 1, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Markets wrapped up a tumultuous April that saw stocks whipsawing. Most US stock indexes finished an even full month in the red, but a late rally Wednesday paired the losses and put the Nasdaq Composite in positive territory for the month. The Dow Jones Industrial Average ended April down 3.2%. The S&P 500 dropped 0.8%. It was a third consecutive monthly decline for both the S&P and the Dow. The tech-heavy Nasdaq eked out a monthly gain of 0.9%, while the Russell 2000 lost about 2.4%. The S&P 500 and Nasdaq closed out their most volatile months since the pandemic turmoil of March 2020. For both indexes, the gap between intraday highs and lows have averaged more than 3 percentage points. All of the benchmarks ended the month well off the lows they hit in the days after President Trump's Liberation Day tariffs. The US economy shrank at the start of this year as trade turmoil began to hit, prompting businesses to stock up on goods from overseas. In a session filled with economic data, the Commerce Department said its GDP data for the first 3 months of 2025 showed a contraction of 0.3%, down from 2.4% growth in the previous quarter. That was the first decline since the start of 2022. A separate report on monthly consumer spending, which accounts for more than two-thirds of economic activity, showed a jump of 0.7% in March, topping expectations for a 0.5% rise. Both the GDP and consumer spending data appeared to be affected by the trade war as businesses and consumers pulled forward spending to avoid tariffs. President Trump's Liberation Day tariffs came after the quarter ended, but data reflected front running ahead of those and other duties, as well as uncertainty about trade policy. Imports, which subtract from GDP, surged at a 41% pace. A gauge of the labor market indicated US private payrolls growth slowed more than expected in April, as the ADP National Employment Report revealed an increase of only 62,000 jobs, well short of the 115,000 estimate. That was down from 147,000 in March and far below economists' expectations. Meanwhile, the Federal Reserve's preferred inflation gauge showed muted price pressures in March. On the plus side, a gauge of inflation showed price pressures cooled in March, stemming some fears for a possible stagflation environment when growth slows and prices rise. Stocks fell broadly after the release of the data before major indexes paired declines in the afternoon and rallied into the close to finish mixed. The Dow and the S&P 500 closed higher after a great rally on Wednesday, erasing declines from most of the session. Stocks climbed out of session lows after a Chinese social media account affiliated with the country's state-run channel posted the US had been reaching out to China seeking to negotiate on tariffs. The Dow Jones Industrial Average rose 142 points, or 0.35% to 40,669. The S&P 500 gained 8 points, or 0.15% to 5,569. And the Nasdaq Composite lost a meager 15 points, or 0.09%, to settle at 17,446. The Dow has fallen as much as 1.9%, the S&P lost as much as 2.3%, and the Nasdaq shed as much as 2.9% during the session. Consumer staples were among the best performing sectors, up 0.7% in part due to a 3.8% climb in chocolate and snack company Mondelez, which after its quarterly results topped expectations. On Wednesday, after the closing bell, Meta Platforms rose more than 4% after its quarterly earnings beat estimates, offering strong guidance despite fears of an advertising slowdown due to tariff uncertainty. Microsoft shot up nearly 6% after its results topped revenue estimates on strong cloud bookings as businesses ramped up spending on AI tools. Concerns about a deceleration in AI investment had been spurred earlier in the session by Supermicro Computer, which cut its third quarter forecast due to delays in customer spending. Meanwhile, the social media company Snapchat's parent Snap said it would not provide a second quarter financial forecast, saying some advertisers have curbed spending due to the US plan to close a loophole waiving tariffs on the lower value goods. Snap is the latest in a string of companies in various sectors that have withdrawn their outlooks. Super Microcomputer tumbled 11.5% and Snap plummeted 12.4%. Dow Component Caterpillar shares were choppy after its disappointing quarterly results, ending with a 0.6% gain. Treasury yields were little changed after the yield on the 10-year note settled Tuesday at 4.17%. The Treasury Department signaled Wednesday morning that it had no current plans to increase the size of its note and bond auctions. Traders are now pricing in a full percentage point interest rate cut from Federal Reserve by the end of the year, although recent comments from Fed Chair Jerome Powell and other officials have indicated the central bank is likely to be cautious before adjusting the policy. My take: 100 days of Trump. Wednesday marked 100 days since President Trump took office. Changes in trade policies and tariffs have heightened the uncertainty and fueled volatility, negating initial enthusiasm after his November election over the possibility of business friendly policies such as deregulation and tax cuts. The focus is, rightly so, on tariffs, negotiations, reductions, abeyance, and potential deals. The capital markets have been kind of weak, aimless, directionless, and then there were discussions or bullet points coming out from the White House, and the markets moved. This just shows that watching policy evolve in real time is high up on the cards. If Trump's tariffs have pushed expectations off a cliff, there is the silver lining that it will be hard to not see some improvement in expectations over the next few months. Underneath, however, real final demand remains super strong. Those who underestimate the US consumer do so at their own peril. The proof lies in the pudding. Stocks have enjoyed a recent run up, spurred by hopes tariff turmoil won't hurt earnings and the economy as badly as feared. That's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me at st@st-money.com for any further information. I'll see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it is all about money.